So how are South Africans handling a prime interest rate of nearly 12%? We're hearing of many defaulting on their loans. Let's get a perspective from the head of DebtBusters now, Benay Sager. Benay, thank you. The jump, all right, we don't have Benay yet on the wall, but the jump, if you're paying a big asset from 7% to 11.75% on prime, that's massive, isn't it?
Yeah, it's a large jump, as you articulated, and I think what we see is in South Africa, most of the consumers who have a bond will also have a vehicle that's financed, and that's additional burden, as you rightfully said. And both of these are generally linked to any changes in the prime rate. So anytime the prime rate, as you mentioned, goes up or down, consumers feel it. Now, we have to go back and remember in 2020, that rate was very, very, very low. In 2019, it was higher. So going from late 2019 to early 2020, we all benefited from really low rates, as you articulated. In fact, if you look at for our typical DebtBusters client back then, they were paying on average about 8.3% per annum for their bond. Now they're paying 12.2%. So it's a huge jump. And I think you articulated the numbers. I don't need to repeat them here. It's several thousand rands more. But also for vehicles, we have to remember that any financed vehicle in South Africa is also subject to the same rules. So those average interest rates have gone from 12 to 15.4% from what we can tell. And that's extra a few thousand rand that we wouldn't necessarily have. I think leaving that aside, on top of that, we also have to talk about inflation and so on. So I think the impact on the consumer is very severe in terms of disposable income, which has really been hard to come by. But there's another dimension, which is about salaries and what's happened to salaries. And I think, even if the interest rates do not increase, which is what we're hoping for today, as you rightfully said, there's still going to be pressure on disposable incomes. And those incomes haven't really changed over the last few years for the workforce.
So you've got stagnant salaries. I mean, if you were living on the edge and then you took on more debt, you could now be pushed over the edge. What sort of picture are you getting of how many people are defaulting on their loans?
I think what we're seeing is that for the group that borrowed, generally for the first time, so some of our younger South Africans who borrowed for the first time to buy a house, like you indicated, during the low interest rate period, those are the ones who are seeking help the most currently, because what's happened is, as you articulated well, there's this unexpected sudden increase over an extended period of time of 475 basis points. And many of them would not have seen, the global financial crisis and the impact thereof in the late 2008 to 2009 period to know what happens with interest rates. And they were probably borrowing a bit too close to the edge, even though it was for a house or for a vehicle. And I think what's happening now is, the obligation to pay for the house, to pay for the vehicle is eating away at their disposable income. So what we're seeing is an elevated share of take-home pay being needed to essentially service those debts, to the extent that we see consumers in our most recent Q2 2023 debt index. We've seen the average unsecured debt levels go up by about 26% compared to the last few years, where we know the incomes have not grown up by that. And I think that's just a sign of the times. And over the same period, the inflation impact would have been around 40% in a cumulative way. So I think what we're seeing is that we are getting poorer, unfortunately, in terms of what we're left with at the end of the month. And I think that's the pressure that we are also observing with the consumers who come to DebtBusters for help.
So, I mean, in Joburg, you spoke about the cost of living, and it's also a double whammy, isn't it? In some areas at the coast, we've seen house prices go up. But say you bought a home here, your price may have gone down. So if you try and sell, let's just look at the people who are trying to sell. Could they land up with debt on a home they don't even own? Is that what happened? That is what is happening?
That is a scenario that does happen. We have seen a lot of consumers who essentially couldn't make ends meet, and they get into a situation where through the bank or through some other means, they try to sell it to to do the right thing, meaning moving to a less expensive property or maybe renting. But what happens is the moment that you put your name against that bond, you are legally liable for it. So even if you sell the house for less than what you bought it for, you are still going to be liable. And actually, this is a scenario we see much more often on vehicles. Again, going back to how we educate each other and everyone, we need to understand that things like balloon payments, particularly for vehicles, which have been on the rise, we see the amount and the frequency of the balloon payments that come with vehicles. That has gone up. And if you're going to sell, if you sign on to an agreement where there's a large balloon payment at the end of your term, let's say 3 or 4 years down the road, that's not really an issue for today. But if you're forced to sell that vehicle because you cannot afford the monthly repayment amount, you have to remember that you're still liable for that balloon payment. So that becomes payable and due. And in most cases, particularly with vehicles, but to some extent with homes, like you said, in Johannesburg and other inland areas, what the value of the property is, whether it's a house or a car, may not be enough to cover the shortfall. So I think we would advise everyone to get the proper advice before they undertake such activities to make sure what they will be liable for and that they can cover the shortfall if there is going to be one.
And I think one day we have to have a whole discussion on balloon payments and help people make the best choices there. Very quickly, what is your advice? What are the options for somebody who's feeling like they're in real trouble right now?
Yeah, I think if the trouble is coming from how much of your salary you're spending on debt repayments, I would advise them to speak to a registered debt counselor almost immediately. If your trouble is coming from the fact that maybe you're spending too much money on things that you may not need, you may scale back on those. But I think what you're going to find is for most people really struggling under the burden of the increased interest rates, give us a call or give someone else a call who's in the same industry, get some advice, understand what your options are. If you wait too long, then your options narrow, and I think it's not a pretty picture.
All right, thank you very much. And that's all about negotiating early with the banks and seeing if you can consolidate your payments, get out of your situation. That was the head of DebtBusters, Benay Sager.